Hello traders, Gary Wagner here, approximately 12:40 in Honolulu, 5:40 in New York on Wednesday, 12th day of January 2022, and this is the Daily Report for gold and silver. Riding on the shirt tails of yesterday's dynamic move in gold and today's dollar weakness resulted in a continuation of a major uptrend that we have seen developing for the last week in gold. Today, gold futures gained $7.20, 0.4%, with the February contract currently fixed at $1,825.70. Silver had a much stronger gain in terms of a percentage gain, trading to $23.18. That's a 37-cent increase, or 1.61%. And as I said, this was a direct result of U.S. dollar weakness. The dollar lost about 0.7%, 0.68% to be exact, and is currently fixed at 94.975. Traders, gold continued to rise from a rally that began approximately on the 6th day of January, with gold trading around 1785. That is this area right in here. And over the course of this last week has risen dramatically from 1785 up to current pricing at $1,825.70. We're looking at a 30-minute Heikin Ashi chart to look at the strength of the current trend and how it has been playing out. What we can see when we look at this chart is that it is moving in a very methodical manner, in which we have periods of pretty strong price ascent followed by shallow declines. We're seeing that across the board. Here we have a medium level decline, and then once again into the pattern of strength. When I compare that to a move such as a parabolic move, by having these short periods of retracement, it has the ability to move higher from this point. You can see that back in this area at the beginning of the chart, you virtually have the absence of lower wicks, which is the perfect definition of trend strength. Although the body size is large at some points and medium at some points, at no point during that 30-minute trading session did prices trade at or below the midpoint of the prior candle. You get your typical shallow retracements. This last component that we're looking at, which is today's action, does have lower wicks in many cases, but it is still showing that there is good strength left in this trend. Traders, as I spoke about yesterday, this morning we did send out a trade alert just prior to the opening of the New York market, suggesting that all of our traders that took our long recommendation the other day and got in at 1787.60 to move your stop up to 1798.60, putting it just under $1,800 per ounce. We're doing that so that we have some flexibility should there be some price volatility. Today, we did get a continuation of gold moving higher as the CPI numbers came out right where the analysts had expected it to. The forecasts were that the CPI index that includes food and energy costs would rise to 7%, a inflationary rate that hasn't been seen since 1982. The reason we had a much more tepid move today than yesterday was yesterday's move was in anticipation of that report coming out. If the report had come out anywhere below the forecast, we could have seen it move down. If it would have come in well above the forecast, we could have seen a stronger move to the upside. Nonetheless, I'm very satisfied with what we're looking at, with gold at $1,825 and our position at $1,787. We will look to continually trail the stops higher as long as we see gold moving up or especially if we see weakness at any of the resistance points that we have identified. Currently, as I said, we're trading at 1825.80. We have no real resistance until approximately $1,833.40. That is based upon the 38% fib retracement. It is from a short data set from the November 3rd low of 1758 up to the highs on November the 16th at 1880. Above that is the 23% fib retracement level. That comes in at 1851. And then we have major resistance at this former top that occurred on November the 16th at approximately $1,880. Therefore, our targets on this trade is first 1833 to see if it can break through that price point, or if the market wants to retrace before moving higher, 1850. And then the brass ring, as far as I'm concerned, would be to exit the trade at $1,880. But we are certainly a far way ways from that price point. We still have two hurdles to get through before gold can ascend to that point. But the fundamentals, which is the high level of inflation, the highest seen since 1982, that are propelling gold to move higher. And it will continue to act in that way as long as inflationary pressures continue to grow or at least don't diminish. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.